Hello, everyone. Matt Clark, research analyst for Money and Markets, here with another episode of the Bull and the Bear podcast. Make sure you head over to moneyandmarkets.com. It is your home for safe, sound, smart, simple, profitable investment information for your portfolio. While you're there, do make sure you check out our stock power rating system. It rates thousands of stocks based on 6 fundamental and technical factors. You can create your own watch list. You can track your stock performance, and you can get all of our in-depth analysis. You can use this tool for free at moneyandmarkets.com. Now, today I'm going to talk about the rise of automation and how you can best profit from it. Basically, automation is everywhere. From robots on assembly lines to drone delivery services, we're finding new ways to build, deliver, and use products with very limited human interaction. But automation is complex. It's not something that's very easy, not only to understand, but to build out. The electronics and systems that go into these robots and artificial intelligence programs are anything but basic. This week, I'm going to reveal a company that specializes in these complex technologies that are becoming commonplace in our daily lives. Now, the stock rates a 91 on our stock power rating system, meaning we expect it to beat the broader market by at least 3 times over the next 12 to 24 months. And despite the market being down, this stock is actually showing a strong upward trend. Now, like I said, the automation market, automation is everywhere, and the market is growing at a rapid pace. According to recent studies, the global industrial automation market was valued at $175 billion in 2020. Now, by 2025, that's expected to grow to $265 billion. That's a 51% increase in just 5 years. Direct manufacturers of automation components like robots won't be the only beneficiaries of this massive growth. Suppliers of the complex electronics and systems like semiconductors and electronic components are also going to enjoy the tailwind as money moves up the supply chain. Now, the chart here I'm showing you, if you're watching on video, shows the actual and estimated revenue of companies specializing in producing semiconductors and other electrical components like those that are used in automation. After COVID-19 knocked the industry down a bit, it's expected to roar back. Revenue from these companies in the U.S. totaled $89.4 billion in 2020. That's expected to grow to $106.3 billion by 2024. It will be the most growth the industry has seen since 2013. Now, what I'm going to do is I'm going to dive into a company that rates high in our stock power rating system and tell you why it's a strong contender for your portfolio. It rates a 91 overall. It means we're strong bullish on the stock, and we expect it to beat the broader market by at least 3 times over the next 12 to 24 months. The power stock meeting this criteria is called Sanmina Corporation. It trades on the NASDAQ. Its ticker symbol is SANM. SANM. It's a California-based company that specializes in producing electrical components. They also do repair work and aftermarket services for things used in manufacturing automation. Sanmina also provides printed circuit boards, cable assemblies, and plastic injection moldings. And the industries they service range from aerospace and defense to medical. They even make components used in smart vending machines and kiosks that we see everywhere nowadays. Now, SANM does rate a 91 overall in our stock power rating system. It means we're strong bullish on the stock, expected to beat the market by 3x over the next 12 months. Its high rating is powered by exceptional scores on value and quality. SANM's price-to ratios are all currently lower than the manufacturing equipment industry averages. For example, Sanmina's price-to-earnings ratio right now is 10.14. The industry average is 13.17. For price-to-sales, SANM is at a 0.4. Peer average is 0.65. It all means that SANM is a much better value than its manufacturing equipment industry cousins. As for quality, SANM's return on assets, equity, and investments are all positive, while the industry averages are either flat at near zero or slightly negative. The company scores a 74 on our growth metric, but its annual earnings per share growth rate is 103.2%, which means it's growing its earnings per share at a pretty solid pace. And in its recent quarterly report, the company reported an increase of sales of 12.5% from this quarter to the same quarter a year ago. Now, Sanmina's total annual revenue in 2021 was around $6.7 billion. That's a slight drop from 2020. However, expectations for both this year and next year are for that revenue to jump, reaching $7.8 billion by 2023. That's a 16% increase from where it was last year. Keep in mind, our rating system looks back at data, but I think it's equally important here to look ahead at things like total revenue to get a solid picture of not only where the company has been, but also where it's going. Now, looking at the stock performance of SANM, we can see there's been a lot of bouncing around of this stock. However, the stock, which is the red line in the chart you're seeing on YouTube, is still outperforming its peers, which are down 3.3% over the last 12 months. SANM is up 4%. So there's a wide difference where SANM is still up over the last 12 months. Its industry peers are actually in the negative over the last 12 months. More importantly, and this is one thing I want to really focus on here, we see that the stock is in an uptrend currently, even when the rest of the market is trending down. In fact, as of Wednesday, when I'm recording this, the stock was only about a 1.5% off its 52-week high, which is actually kind of impressive considering how the state of the current broader market. So again, while past momentum has been mixed, the stock is trending higher, and it has closed in and is closing in even closer on its 52-week high just this week. The bottom line here is that automation is only going to get more and more prevalent in our lives. So there's really no way around that. It's not going to go anywhere. Companies will race to build out these systems and build out robots and drones and things like that limit human interaction to provide goods and services. But the key thing here is companies like Sanmia Corporation are going to be right alongside those companies, providing the necessary electrical components needed to make those new systems. So as automation continues to rise, companies like pick and shovel companies like Sanmia are going to rise right along with them. Now, let's look back at our YouTube poll question this week. Last week, we asked viewers where you saw buying opportunities in the stock market right now. Interestingly, 38% of those who voted said they were looking for opportunities in high growth tech stocks, while 19% said they were looking at defensive stocks. Another 15% said gold and precious metals, which is kind of an interesting hedge. And in fact, I did a video with Charles Sizemore earlier this week talking exactly about gold as a hedge. Encourage you to check that out on our YouTube channel. And of course, the remaining 27% of those who voted said there's no solid buying opportunities in the market right now, which is not necessarily the case, as I pointed out here with Sanmia. You just kind of have to know where to look. And the key here in what we do at Money and Markets and with Greens and Fortunes is we look for profit where other people are not looking. So we're looking at something like automation. This is a place where you can find profit and with a company that is already showing an uptrend, whereas most companies are not. Now, remember, you can vote in our weekly poll question on our YouTube page. It's right under the community tab when you're on our YouTube page. So I encourage you to do that each and every week. If you have a question on a particular stock or maybe the broader stock market or maybe the economy that you'd like Adam, Charles, or myself to take a look at, you can email us. The email address you can reach us at is feedback@moneyandmarkets.com. We'll flash that right down below there so you can get that email address. It's feedback@moneyandmarkets.com, or you can comment below on our YouTube channel. We definitely encourage that as well. We love to see your comments. We love to see any insight that you might have, anything that you may be looking at as far as stocks, any questions you have about stocks or the market. We love to see it. We love your feedback. Try to get back to as many people as we can. It's tough because we get a lot of feedback on a weekly basis, but we certainly try to because we want to know exactly what you're thinking in terms of the market. If you do ask us a question and we do use it in one of our upcoming videos, we're going to send you out some very cool Money and Markets gear. We've got t-shirts, we've got hats, we've got sweatshirts, we've got all sorts of good stuff. We will get some of that sent out your way just for sending in a question and us using it in any of our upcoming videos. Also, head over to moneyandmarkets.com, sign up for our free daily e-letters. We now have two. We have our Money and Markets Daily, and I just came out with our Stock Power Daily email that gives you one stock every day you need to look at for your portfolio. Head over to moneymarkets.com and you can sign up for at least one of those email letters. We'll have a sign up for the Stock Power Daily coming up here in the near future. And while you're at moneymarkets.com, check out our proprietary stock power rating system. You can use our metrics to get ratings of thousands of stocks traded out there. Go to our website, go to the top right hand corner, find a little search bar, type in any ticker, any symbol, and you'll be able to load up the stock rating. You'll see the fundamental data. You'll see the stock chart. You'll even be able to add stocks to your personal watch list on Money Markets and track their performance. And you can do all that absolutely free at moneyandmarkets.com. That's all for me this week. Until next time, this is Money and Markets research analyst and host of the Bull and the Bear podcast, Matt Clark, wishing everyone safe trading.